Well, good morning and welcome to the Reserve Bank. With me, I've got Grant Spencer, who's the Deputy Governor and the Head of Financial Stability. New Zealand's financial system is resilient and continues to function effectively, but risks to the financial stability outlook have increased in the past 6 months. Although New Zealand's economic growth remains solid, the outlook for the global economy has deteriorated. Despite highly accommodative monetary policies and low oil prices, growth is slowing in a number of trading partner economies. Dairy prices remain low, with global dairy supply continuing to increase. Many farmers now face a third season of negative cash flow, with heavy demand for working capital. Imbalances in the housing market are increasing, with house price inflation lifting again in Auckland after cooling late last year and early this year. House prices have also begun increasing strongly in a number of regions across New Zealand, although house prices outside Auckland are generally much lower relative to incomes. The bank remains concerned that a sharp slowdown could challenge financial stability, given the large exposure of the banking system to the Auckland housing market. Further efforts to reduce the imbalance between housing demand and supply in Auckland remain essential. This includes measures such as decreasing impediments to densification and greenfield development, and increasing infrastructure and other constraints to increased housing supply.
In the banking system, capital and liquidity buffers are strong and profitability is high. However, the system does face challenges. Internationally, credit spreads have widened, placing upward pressure on the cost of funds for New Zealand banks. The level of problem loans in the dairy sector is projected to increase significantly over the coming year, although we do expect that losses on dairy loans will be absorbed mainly through reduced bank earnings. On housing lending, while the impact of the LVR restrictions on house price inflation has been transitory, the restrictions have substantially reduced the proportion of risky mortgages on bank balance sheets. This is providing an ongoing improvement to financial system resilience. The bank is closely monitoring housing market developments to assess whether further financial policy measures will be appropriate. Finally, the Reserve Bank continues to make progress on key regulatory initiatives. Consultation papers on proposed changes to the outsourcing policy for banks and on changes to bank disclosure requirements will soon be released, and a consultation paper has recently been released on crisis management for financial market infrastructures. Thanks.
This housing issue is a lot more than just simply macroprudential policy. On the demand side, you've got strong migration, one of the largest migration surges in the last 100 years that the country is experiencing. You've got low interest rates, which are a product of international interest rates plus policy settings here. And on the supply side, and that's really the heart of the issue, is trying to get a supply side response greater than what we've been able to achieve to date. And that's tied up with a whole lot of issues that are regulatory in nature, that link to planning processes, that link to the availability of land, in terms of development potential, that's linked to the productivity of the building sector. It's linked in Auckland to issues of densification and unitary plan. So that's where a lot of the solution lies. It's trying to generate a greater supply side response It's not simply this can be fixed with macroprudential policy. These imbalances are significant.